You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phone. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Hey, good afternoon. Welcome back. Today is, wait for it, Tuesday, 30th day of July, 2019. Thanks so much for joining us, whoever you are, wherever you are. We're just glad you're right here, right now. Let me put up a chart, and then I can say I have a chart up of the S&P 500 E-mini Futures. If you cannot see the chart, go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds. That will give you one-click access to the show each and every day. When you find yourself away from the office, away from your desktop, and you still want to join the show, piece of cake, go to youtube.com/CFRN/live. There you will find a live, real-time simulcast of the show as it happens, brought to you by the good folks at YouTube. Thanks, YouTube. All right, the chart I have up at the moment is a 30-minute chart, of the S&P 500 Emini Futures, and these are last week's zones. I'm going to put this week's zones up a little early this week because we are in a trial, not just any trial, but our 1-year anniversary trial. So I want to make sure that everyone who is on the trial has an opportunity to see just how these weekly trading zones work. But before I do any changing, I want to point out this is last week's, or one of last week's weekly trading zones. And what did price do? Came right down, found it like a heat-seeking missile, and then what happened? It turned around. Yesterday, I showed you many examples of consolidation like this and this. That's the most likely thing to happen when price encounters a weekly trading zone. Only 3 things can happen. You got your consolidation, your rejection, and your slice. Rejection being the second most likely, the slice being the least likely, but it still happens. Rejection is this. Now keep in mind, this is not this week's weekly trading zone, this is last week. But again, I left them up because before I change them, I wanted to point out the importance of the first couple days of the new week. Sunday, Monday, here we are, Tuesday. There is carryover power, right, from one week to the next. Now typically, about Tuesday, the new zones really slide in and take the front stage. But rejection, right here. See that wick touching the zone? Body of the candle not touching the zone. Imagine, if you will, someone reaching out, touching a stove, only to find that it's hot, and they snatch their hand back. That's a great visual, right? A little painful. No one was harmed in the creation of that analogy, but, right? Okay, consolidation, rejection. The third and final thing that can happen, the least likely thing that can happen, the slice. I'll find one of those during today's broadcast, and I'll point it out so that you understand. Now, in a business filled with infinite possibilities, where anything can and does happen, to be able to say with great certainty that only 3 things can happen under a certain set of conditions, there is actually there's some power behind that. As you understand it, as you learn to work with it, flow with it, might even be a better term, you'll see what we've seen since December 14th of 2009. Consolidation, rejection. Let's peek in on our daily chart. Swing low on the daily chart, S&P 500, put in on June 3rd. Most recent swing high, put in, as it was the closing price here. We had a closing price here of 30.23 with an intraday high of 30.2950. And then here we've got 30.2275 was the closing price. Okay, so this right there, that is your new all-time historic high in the S&P 500 Emini Futures. Now, based on Fibonacci's math, and that's not the latest thing to come rolling down the pike, it's been around for a few centuries. After this high, we're looking for a retracement, because that's what the market does, that's how markets work. The shallowest possible retracement would be here at the 24% fib, 29.55. But before price can get to even the shallowest fib on the daily chart, it would have to pass through the BBC. And we know that the BBC holds more often than it doesn't. So even if price makes it to the 24% fib, and eventually it will, when it hits the BBC, more than likely we're going to get a pretty good bounce, just like the one we saw here. In fact, I need to adjust that up just a skosh. So we embrace that new all-time high. There we go. That puts the 24% fib at 2960/61. Okay. So what are we looking for price to do? Unless we rally up on the Fed announcement, which we very well may, and most likely will, if we don't take out this high, then we will go to the BBC. We will get a bounce, most likely, and then we may eventually, or we will eventually find the 24% fib, but it might not be on this pullback, okay? But we're definitely looking for a move down to 29.92, which is currently the position of the BBC, okay? All right, let me entertain you. No, let me go over. Yeah, I got a little bit of news. Let me just give you this real quick. Facebook told its investors in its latest quarterly report that while the firm expects to launch Libra next year, some factors could prevent its release. In the risk factors section of the document, the company admits that it recognizes the significance of the pushback shown by regulators towards Libra. CNBC also reported that a Facebook spokesperson told the outlet on Monday that engaging with regulators, policymakers, and experts is critical to Libra's success. This was the whole reason that Facebook, along with other members of the Libra Association, shared our plans early. As Cointelegraph reported earlier this month, Alexander Lipton, a Connection Science Fellow at the Massachusetts Institute of Technology and adjunct professor of mathematics at New York University, has claimed that Libra's white paper copied concepts for a coin proposed in his academic work. Also, earlier this month, online brokerage Monex Group, owner of the hacked Japanese crypto exchange CoinCheck, announced that the company plans to join the Facebook Libra cryptocurrency project and has filed an application to join the Libra Association. Meanwhile, up on Capitol Hill, the Senate Banking Committee right now is listening to testimony from Circle CEO Jeremy Allaire regarding all things blockchain and cryptocurrency. I won't go through the whole discussion, which they are blogging that live, but there was one little bit here that I thought you might find interesting. I may not find it at this point. If not, I'll dig it up while Michael's doing his bit, and then I'll bring it back. Hang on one second. Let me just look here while I'm thinking about it, because if I don't, then later I might not be thinking about it. It had to do with crypto at large.
Like Geraldo.
Yeah, just like him. All right, I'll find that bit. I'll bring it to you here in a bit when I come back. Let me give you the numbers from around the world real quick, and we'll go to Michael, get a recap of what happened this morning in the live trading room. All right, starting here in the U.S., currently the Dow up 46 points. Hang on, let me refresh that. Yeah, how about the Dow down 45 points? Yeah, that's a little bit of a difference. NASDAQ down 24. S&P 500 down 9. And the Russell 2000 in positive territory, up 6.5. In the commodity baskets, crude oil up 35 cents, trading 57.22 last. Gold up $8.50, go gold, trading 14.2890 last. In the Asian markets, at the close, the Nikkei posted a gain of 92 points. The Shanghai was up 11, and the Hang Seng gained 40. In European markets, at the close, FTSE down 40 points, DAX down 270, and the CAC down 90. Now, as far as movers and shakers go, for the DAX being down 270 points, that represents a drop of over 2%. The CAC being down 90, that's a drop of 1.5%. That gives us a green day in Asia, a red day in the UK, and so far it's a mixed day here in the US of A, with again the Russell the only one hanging on to positive territory at the moment. And there you can see the Russell up on the big screen. Let's go to Michael, get a recap of what happened in the live training room this morning, and then I'll be back. We'll talk to John. We'll take a look at alerts, all that, and answers to your questions when I come back.
Okay. Man, I'm just checking on one quick thing, but okay. I'll bring it over here. Valerie, no, that did not happen. So let Joan know.
All right. You got it. All yours.
Okay. Thank you, sir. I'll do my best. Here we go. We had a red day today. So when you asked for the recap, it was a red day. But I'll go through it all. Okay, if you have not taken a free trial with us, go to the home page at CFRN.net, and in the right-hand column it says 5-day free trial. Apply.cfrn.net. If you click on that, you'll be brought to this page where all we ask for is your name, your email, and your phone number. You can put in your biggest trading challenge so we can tailor the one-on-one training to your challenge. Okay, if you want to. Hit the send button. And once you do that, you'll be sent all the information you need to get into the live training room. All right. So today, we actually had a red day. I gotta color this properly. We had a red day today. I think the Fed tomorrow has got the markets all messed up. But anyway, we're -7 on crude and -8 on gold, so we're down 150 today. That's our biggest down day in like a year, something like that. I'm knocking on wood. But I think after tomorrow, we'll have more action. Today we took 7 trades. On the month now, we're at $2,753. That's over 21 days, averaging $131 per day. And on the year, we are at $17,301. That's over 134 days, averaging $129 per day. 129. Okay. So now let's take a look at what happened and what didn't happen. We got stopped out pretty much to the take care on gold, and then it went down and did what it should have done and gave us, a good down move. Changed directions, and we ended up with break even after break even after break even. We were just having trouble with follow through. It was back and forth and back and forth and back and forth. And you can see during the break, there was really nothing here during the break. You want to establish a trend. Step number one is make sure you have a trend. Okay, on the euro, there was just absolutely nothing. I mean, this is going to be probably the quickest recap I've ever done. We really didn't have any trade setups. It got really choppy in here, and there were a bunch of wicks here and a bunch of wicks here. And because of those wicks, I didn't want to do anything until we had a good breakout like we had right here. But then it just turned around and snapped right back up and did 100% retracement. Came back down, did about roughly 68% retracement. And now it's moved back up. So during the break, if you were ignoring step number one, establishing a trend, then you could have taken a long off the BBC right here. But I wouldn't have done anything. And I'm still waiting. Okay. This is a really tight range right here between the high and the low of the day. So keep that in mind. Crude oil. We started out here, got one tick on crude, and then we got to stop out on crude. And then we didn't do anything right in here for a couple of reasons. One, we didn't have a trend, and two, the cycle was flat and in the middle. So crude dropped down to the weekly trading zone, punched in a new low on the day, turned around, came up, and I wasn't comfortable with this either, right here. So I didn't do it, and it ran up and almost made a new high. and it came back down, turned around. The markets were just awful today. You know, I was drawing stuff, I was talking about stuff, but look at this. Look at this right here. When you see markets like that, yeah, you just want to stay away from them. Okay. Let me pop the question box out. Joan. Yeah, Joan. That did not happen on our side. Okay. I can send you a screenshot if you want, but it did not happen on our side. I know you're anxious about it. I had the same thing happen to me last week. I'm sorry. Joan she sent an email. She was charged for something that she shouldn't have been charged for. And last week I got charged 21 times for something I tried to order from Macy online. A $10 item. Anyway, so I know I feel your pain. I feel your pain. I had to cancel all because I used three different debit cards to do it. And so I had to cancel all three of them. Anyway, so right here, crude just going sideways, and there is just nothing right now. We have crude inventories coming out tomorrow. We got the API numbers coming out this afternoon. Uh-oh. Cancel. We have the API numbers coming out this afternoon, and you know, I'll give you some numbers tomorrow, but you got to remember it's FOMC week. You know, I'll give you some numbers for options. Well, hopefully I'll be able to. It depends what the markets do. On the ES, we had a break even right here, and nothing else happening. And you know, as soon as I saw it going into the weekly trading zone this morning, I was like, oh no, not another day like yesterday. And it was another day like yesterday. We had one break even on the ES. So to sum it all up, I'll bring up the spreadsheet again. We had a red day. We're minus $150 today. Now you got to keep that in perspective, you know, because we were plus 250 the day before. And, you know, you just got to keep it all in perspective. All right, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 30th day of July, 2019. We lost 7 ticks on crude, and we lost 8 ticks on gold. Minus 150 on the morning. We took 7 trades, and on the month now, we're at plus $2,753 per contract. That's over 21 days, averaging $131 per day. And on the year, we're at $17,301 per contract. That's over 134 days, averaging $129 per day. If you have not taken our free trial, go to the homepage here at CFRN.net. Right over here in the right-hand column, it says 5-day free trial, apply.cfrn.net. Click on that, and you'll be brought to this page, eminitrainingschool.com. Now, you can go directly to eminitrainingschool.com if you want to, but scroll down to where it says 1-week free trial. Put in your name, your email, your phone number, and you can tell us your biggest trading challenge, and we will try to tailor the one-on-one training to your challenge. Okay, if you want us to, we'll do whatever you want. You know, answer all your questions, all that stuff. Hit the send button, and you'll be sent all the information you need to get into the live training room. Okay. Okay, and with that, we can go back out to fabulous Phoenix, Arizona, overlooking South Mountain, Studio A, where Dwayne is currently residing. It's the largest city park in the country.
Well, there we go.
And there it is.
All right. And I heard you say, just as I was taking my headset off, that it was a red day. So
Yeah, it was. It was.
now, folks, that is
Truth
the
about
truth about trading. Go ahead.
Yeah, no, I was just going to say, it's the truth about trading. I mean, the markets were bad today. The good thing is we only had 2 stop outs. You know, out of 7 trades, we only had 2 stop outs. And, you know, you just got to wait for it. You got to let the markets come to you. I mean, look at crude oil right now. It's just awful. And note, Dwayne, that we rolled the gold.
Yeah, I already changed my chart to Z.
Okay, good. Good. I just wanted to make sure.
So it's gold on the Z contract at 1441.10 at the moment. And
Yep,
the crude you spoke of
Yeah, crude is ugly right now.
going sideways.
Uh,
All right. Now, of course, tomorrow we have a Fed announcement, which should bring a lot of volatility to the markets, probably some to the upside, probably some to the downside. We'll get a little bit of both. Do we have any other major news coming out tomorrow morning?
I think we do, actually. Yeah, let me go look. That's today. Tomorrow, which is the last day of the month, we have employment cost index, Chicago PMI, crude inventories, and then at 2 we have the FOMC statement and federal funds rate. At 2:30 we have a press conference. So there's some stuff pretty much all session tomorrow. So
For
we
those
should
of
have
you
some
that
good
trade the
volatility.
overnight session, tomorrow morning, make sure I got the right day up. Yeah. Tomorrow morning at 3:55, the German unemployment numbers come out. It is a high impact report. And then at 5 a.m., we get the Europe's CPI. And now here's that again. I thought I saw this. Hang on. Make sure what day am I on. I'm on Wednesday, July 31st. Okay. It's tomorrow. It's official. I've got at 8:15 ADP non-farm employment change. Do you have that?
Tomorrow?
It's
Hold on. Let me go check
on
again.
my calendar, yes, tomorrow.
Yeah, I do. Yep, 8:15. Yeah, I missed that one. Sorry.
That's what I was talking about yesterday. Don't we typically get that on a Thursday or Friday?
No, it's on a Friday. That's different than the
Then the non-farm
Hang on.
payroll.
yeah, the non-farm payroll. Yeah, there's a non-farm employment change
This is
coming
employment
out
change. Okay, but it's still high
Yeah.
impact.
on Friday. Yeah, they're both high impact.
The forecast is for 150,000. Last time out was 102,000. And then we've got at 8:30, so that's at 8:15, and then we got Canada's GDP high impact. They call it high impact, but I've never really seen it move our markets to any degree.
No, it's high impact in Canada. It's,
Yeah. And then we got crude
It's not
oil,
high
of
impact
course,
in the US.
that you mentioned, 10:30.
Yep.
And then we got all that FOMC business going on.
And we have the API numbers coming out this afternoon at 4:30.
And tomorrow night, for those of you that trade Globex, 21:45, 9:45 p.m. Eastern. That's PM. The Cakeson Manufacturing PMI. That's high impact. And that has the potential to move markets if it's a huge hit or a huge miss. Either way. We do have, who's reporting this afternoon? One of the big dogs.
I'm on tomorrow right now. Reporting earnings, you mean?
Mm-hmm.
Oh, I don't know that.
Let me go to my earnings calendar. Brought to us by the good folks at investing.com. That's the economic calendar that I use, by the way, folks. Okay, today. Like it was somebody big, like Facebook or... Oh, this is a huge list. Somebody in the audience, help me out. Who's the big one reporting this afternoon? Oh, I think it's Apple. Is that right?
Oh,
Maybe
that's
it
a big
is.
one.
And maybe it isn't. Apple reports today. After the bell. Okay. All right, let's take a look at the Concierge Trade Alerts from last night on the S&P 500. In fact, let me drag it up there, and if you want to grab a screenshot, you certainly can. I haven't spoken to John yet this morning, so whenever he pops in, he pops in. You taking off?
Okay. I have a meeting a little later on,
Okay.
but I'm gonna hang. I'm gonna hang till about 1 o'clock probably.
Okay, guys, there are the Concierge Trade Alerts from last night. They got out at 7:35 p.m. Eastern. Okay, all right. And on the S&P, consider selling 3014. We put in a swing low at 3,150. We'll call it 13 points. Now, important prices, important areas are almost always tested. Now, do you show current price S&P 3014.50?
No, I show 3012.50.
See there, I relaunched my platform today. Something about my 30-minute chart keeps hanging up. I relaunched the platform. It was churning right along. I guess I'm just going to reinstall the platform. Maybe that's what I need to do. Maybe I just need to. All right, so let me bump it to an hour.
I'd send you my workspace, but mine and yours are so different.
Yeah, it's not the workspace. It's my data feed. Now, hourly, I'm not even getting an hourly.
Yeah, there's got to be something going on your end.
I don't think it's on my end. Well, unless it's the software. I mean, there's nothing. I get no 15 minutes.
I mean, this morning, every morning, when I do the room, if anything's off, people let me know, and nothing's been off. Knock on wood. Nothing's been off on.
I'm not getting
on
anything now.
Yeah. Yeah. I don't know.
Okay,
There you
it's
go.
giving me a 30, but it's not the right price though.
Still 14.50. It's about
Yeah, it's
probably
stuck there.
20 minutes delayed.
All right, I'm gonna log off and just log back on real quick. We'll see.
Let me look at my
if
30 minute.
that
See what that
can
looks like.
fix it.
I mean, you can grab my charts if you want.
Let me try logging off and logging back on.
Okay.
It just reported to Bert that it had straightened itself out because it appeared to when I logged back on. All right, here comes data. Yep, there we go. See, now we're ticking.
Yep, 13 and a quarter.
30, 13
That's right.
and a quarter.
Right there.
Yeah.
13 and a quarter.
Okay, so important prices, important areas, almost always tested. So when we get to the important price, important area, we consolidate for 1, 2.5 hours. And then we make the trip down to last week's weekly trading zone at 3002/03. We get rejected, that is rejection, at a weekly trading zone. Back up to the important price, important area, where we trigger a second time, and this time we drop from 3014 down to 3,009.5. Now we're back up, staring at that zone once again, right at it. And am I still ticking? I think my tick just ran out. Nope, I got another tick there. All right, so that chart's live. Good. Let's go to the Dow. Okay. What price you showing the Dow? Or you don't have a Dow chart up yet? Okay.
I don't have a Dow chart up. I can bring one up.
Let me see. Let me
So it
bump
can be
this one to
accurate.
an hour and see what happens. Okay,
And
I got
why am-
27,165.
Hang on. Let me hit
And on
OK.
a 30-minute, I got 27,164, but I can see it's not moving. All right, well, for the purpose of
I
explanation,
got 27,166 is what I have right now.
boy, now I'm just gonna reinstall the whole doggone thing. See if that helps. All right, on the Dow, last night's Concierge Trade Alert said to consider being short 27,170, and we dropped below 270.70. So that's a 100-point move for the Dow. $5 per point. That works out to $500 per contract traded. This is what the market made available. Okay, we handed you the entry, the market handed you this potential profit. We ran up important prices, important areas, almost always tested. And so from 170, we dropped to 120. That's a 50-point drop. Now we're right back up at the zone once again. On the Russell. This is an hourly chart. Very disturbing when you get very accustomed to looking at a particular time frame and that time frame is not available to you. Not that any time frame is magical. There's nothing magic about a 30-minute chart. The only magic in a 30-minute chart is the magic that you bring to it, because you have an understanding of that time frame. You know how it moves, what it looks like. You even know the personality, as they say. So this was two-sided action for the Russell. Consider being short 1569, and we dropped 1557.40. So we can call that a 10-point move at $50 per point. That's $500 per contract traded. We reversed, headed back up. We did not retrigger here. We retriggered here on the long side. Consider being long 1579, and so far we got a high up there 1581. That's 2 points, $50 per point, $100 per contract traded. And now to the NQ. Now the NQ says 79.92. Swing low. Is that price? Yeah, I see it moving, so that price is right. 79.65. 79.92 down to 79.28. So let's go 90 and 30. That'll be 60. 60 points at $20 per point. That's a $1,200 per contract move. If you've earned the right to trade 10 contracts, well, that would be a $12,000 move. A word of caution. Don't trade 10 contracts. Don't trade 2 contracts. Don't even trade 1 contract just because you have the money. You should start trading 1 contract because you've proven yourself and your methodology, whatever you're using, you've proven it to be consistently profitable. You yourself have been consistently profitable in SEM. That opens the door to going live with 1 contract. If you're trading with us, what we want to see you do is, once you qualify to go live with 1 contract, and that entails putting together 10 days in a row, 10 consecutive days where you reach your daily goal of $100 per contract gross in 10 trades or less. Sounds really simple on the surface, but I have hundreds and hundreds of people who will attest to the fact that it's not as simple as it sounds. How long does it take? How long does it take a person to put together 10 consecutive days in a row? It takes as long as it takes. I know that's not the answer you want to hear, but it's the truth. Another truth about trading. It might take one person a month. It might take you 2 months. Somebody else might do it in 2 weeks. Part of it will be, what previous experience you have had or not had. Sometimes folks with lots of experience have the most difficult time, because they've learned a lot of things that really aren't the truth about trading. And their mind is stuck in that gear, and no matter what new information or what clarity or what truth you attempt to bring to the table, they reject it because they're stuck in their way.
Yeah, I mean, people establish bad habits. That's what it is. They establish bad habits, and they bring their bad habits forward all the time. I mean, we've been doing this for so many years, Dwayne. How many times have we got a guy who's been trading for years who didn't put 20 other things on his charts? When you come to us, you got to come to us with an open mind, a clear mind, and just follow the rules. That's all. Just follow the rules. If you bring other rules in right at the beginning, bring other rules in, then you're going to talk yourself out of trades. You're going to talk yourself into trades. You're not going to have stops. You're just going to do everything wrong that you can. And that's, my
and
humble
if whatever you had and whatever you were doing, if it worked, you wouldn't have come to us in the first place.
Right. You wouldn't be here.
Yeah, but I spent X number of dollars for this concept, this strategy, this indicator, this oscillator. Oh, I'm sorry. Let me ask you this. Is it contributing to the bottom line? No.
Right, you're making money at the end of the day.
You gotta get rid of it.
At the end of the month.
Yeah. You gotta break ties, kick it to the curb. Hopefully you got a lifetime license or whatever, so put it in the closet. It'll still be there someday if you should ever need it. But you gotta clear your mind, you gotta clear your plate so that you can embrace the simplicity of what we do. And what we do is simple by design. We didn't come up with this very simple method of trading overnight. No, it took years, blood, sweat, and tears. Michael and I, we used to have every indicator, oscillator on the face of the earth, and if it wasn't for sale, we coded it ourselves. We were covered in stuff. Our screens were covered in stuff. I had to get extra screens just to put my stuff on.
We had 3 different time frames for each market.
Yeah, it was.
Do you remember that?
Yeah,
we had the 10,000 volume. We had 233 tick, and we had a 4 tick range.
It was utterly ridiculous, quite frankly. And when we realized, but thank God we realized, we were headed in the wrong direction. So we stopped the madness, and we started to go in the opposite direction. And that opposite direction being, if it wasn't contributing to the bottom line, if it wasn't part of a profitable scenario, we got rid of it. Now, when you spend a lot of money for something, it's difficult to get rid of. But when you've spent days, weeks, months coding and perfecting something, getting rid of that is probably even more painful. But you got to do it, and we did it. Thank God. And we begin to see daylight at the end of the tunnel. And for once, it wasn't an oncoming train. So we were very pleased with that. So what you see today, I mean, when I say things like, when prices above the BBC, we anticipate higher prices. Well, what do we get? Higher prices. When prices below the BBC, that's the green line, what do we expect? Lower prices. What do we get? Lower prices. What do we get? Lower prices. Oh, come on. It's not that simple. Well, I don't know. You tell me. Is it or isn't it?
It was funny. I was in a mentoring session yesterday.
Is it or isn't it? Yeah, go ahead.
I was in a mentoring session yesterday, and I think it was with Gary. And he said, so what was your first indicator? What was the first indicator that you created? And I said, well, we created a couple right at the beginning, but one of them was a sentiment and the other was the MA1. Those were the first two. And, and then I went through all the indicators with him and showed him all that stuff. But the sentiment indicator was the first thing that we created, and then we had the MA1. So if the MA1, if the sentiment was blue and price got up above the MA1, simple decision, just go low. And if the sentiment was red and price got below the MA1, simple decision, just go short. It was an interesting question. He had a whole list of questions, and it was an interesting question.
There's a different way of displaying the sentiment, I thought. No. I was thinking of the YBR, I guess.
Yeah, you don't have the YBR on right now.
I just put the sentiment on there for a second.
Yeah, but that's, I mean, it was an interesting question. And, you know, it was so long ago, and I remember sitting at my kitchen table in Boston. It's like a whole other life. Sitting at my kitchen table in Boston. And, you know, the YBR was a byproduct of the elbow.
Right. Yeah, that's what I was looking for. I think I was looking for the elbow. That's what I was looking for. Which
Remember, we had a whole trade setup.
not a bad indicator. I mean, when this thing triggers here, breaks the elbow, and this thing flips from here to here, get out of town. Boom. Boom,
And-
boom, boom,
And so
boom,
what
boom.
we noticed, you know, what we noticed over time is that there was an area within the elbow that price pulled back to. And so that's where the YBR came from. Now the YBR flips when the elbow flips, but the YBR has a little color code on it. And you know, if it's red and you get a down close on the current bar, you probably want to go short. And if it's, you know, if you're above it and you get a blue on the YBR and you get an up close, you probably want to go long. And, you know, and that's on the 4-tick range. You know, once we decided, you know, we weren't going to do 3 different time frames on 2 different markets. I said, well, why don't we do 1 time frame on 4 different markets? And, you know, originally we had 5 different markets, actually. It was all crunched up on my screen. But, so we eliminated 1. But,
Now let me point something out here, guys. To your question, David V.
yeah, FOMC.
What do you guys think about the lack of volatility? Well, here's a tip off. When you get your zones on Monday morning, and there is only a distance of, let's see, on the S&P this week, it's 120 points from the lowest to the highest weekly trading zone. Now, 100 points used to be typical. On any given week, the range from the lowest weekly zone to the highest in the S&P would be about 100 points. Here of late, we've gotten spoiled by some really good volatility, because there's been weeks when the highest to the lowest zone might be 200 points or even more. This week, I noticed immediately as I was putting them together that we only had 120. So I think I might have made a comment in the Telegram channel, I'm not sure. But narrow zones this week, look for decreased volatility, which I probably didn't elaborate on it if I said anything, because with the Fed announcement coming up, I mean, that reeks of volatility. And we should get some good volatility tomorrow and Thursday and probably Friday. However, they will probably stay compacted inside of that 120 point range. It's rare that we close the week above the highest weekly zone or below the lowest weekly zone. It happens, it has happened, but it's rare. Okay. Now, back here, could be considered being short, 79.92. I already told you where the swing low was. And we decided that we would call that 60 points, $20 a point, $1,200 per contract traded. That's what the market made available. However, we do know this, getting out at the swing low or the swing high, it's darn near impossible. In fact, the only way it can happen is because of luck. You just happen to get out there and it just happened to turn out to be the swing high or swing low. No one knows it is that till after the fact. You think about it for a moment, you'll go, oh yeah, okay, well that makes sense. It does. Now we have what's called an exit signal. This one right here, take a look at the step line. That's the little black line. It's on the left side of this declining CFMA1. If you jump down here to the slingshot, you'll see that this is red and falling. This is red and falling. When you put those two together, you know, you don't have to go short, but please don't go long. not in the face of that. All right. About halfway through the move, you see what happened to the step line? It crossed over to the right side. Hey, John, I'll be with you just a second.
Sorry.
On the right side, and then we're looking for the first green close above that step line. That was this candle right here. That closed at 79.59.50. So that reduced this 90 points to about 40, but that's the exact spot you want to exit, because the market is telling you that this move, for the moment, is losing steam. So you take profit. Now, as we approach the BBC and print this red candle, we'll be looking for a re-entry as soon as I get back below that blue and climbing CFMA1. It's all very logical, and that's what you're going to learn over the course of this week. I'm going to teach you things about trading you never even thought about. Whether you, in turn, put them to work for yourself in your trading, in your account, that's going to be up to you. But over the course of the week, you're going to learn some things that you'll carry, whether you become a passport holder or not. You're going to learn things that you'll carry with you the rest of your trading days. Hey, John, welcome to the show. I lost him that quick.
Sorry, interesting discussion there.
Hey, how are you?
Not too bad.
Good to have you with us.
Yeah, kind of, as we said yesterday, to be careful when the Dow is the last man standing, and caused this downturn overnight, possibly the European markets, because they really have taken a big hit. The DAX right now is down 300, which is a fairly substantial drop. That's the equivalent of about a $700, maybe an 750 point drop in the Dow right now. So it's a pretty big deal.
I believe you had a little bit of a warning yesterday on Beyond Meat, didn't you?
I did, yeah, and it was actually down $50 overnight, and it came in and it's recovered, but it's turning down again right now. So it might be done this at least in the short term. I think if it can hold here in this range for the next couple of days, maybe if it holds above 200, it could have another leg up.
I'm hearing talk of insiders trying to sell their shares before the 6-month lockup period is over. They issued more shares yesterday.
Yeah, that could be a problem too. That 6-month thing can be a.
And when you see an insider trying to scamper out before you hit the 6-month mark, that's kind of give you
usually a bad sign. Yeah. Usually a bad sign. It's kind of a mixed market today. We opened lower, sharply lower, and I was kind of surprised. I came in around 5 o'clock, and the market was taking a bit of a nose down. And but it actually was giving me a buy right there, right around the 5 o'clock, and it has rebounded. The most impressive rebound is the Russell, and if you put up the Russell,
there you go.
Look at that. If you could make that a weekly, or I think you'll see that it actually looks extremely bullish, this Russell.
Yeah, that's going to go out of whack. You know what? Let me just go over here. And
or even the daily would probably give it a story, I think.
Do this and do this.
That's a pretty dynamic structure. Look at that. Does that look bullish to you or what?
Oh yeah.
Yeah,
it certainly does.
Yeah, and I think the weekly gives you a bit of a, because, with this rate cut, the Russell is probably going to be a beneficiary of that, and if the Russell goes to a new high, that just gives the market an extended life, frankly. And I think are you able to get the advanced decline on your
let's
thing?
see. Let's just see about that. We tried it one day. I can't remember.
Yeah, look at that beyond. See that? You had the beyond. Where you got it up?
Oh, I'm sorry. What was that again?
Just go back. You've got the beyond chart up there.
Yes.
Just before that. Take a look at that. See that big gap? Wow. Look at that. And there was a hanging man.
This is 30-minute. Right.
There was a hanging man. The last trade yesterday was like kind of a hanging man there, and then it. This broadened kind of structure here could mean I would say if we start heading back above 215, that will probably signal that this stock has still got some upside to go. But I'd be pretty careful of it, right now, because just from what you've said and other factors that might influence it in the short term.
Now, there was a question earlier, John, about diminished volatility this week. We lay it at the feet of the Fed, just cautious trading ahead of the Fed. What do you think? Obviously, there's some issues that have moved tremendously.
We're getting volatility, and look, when the market sort of sells off like this ahead of the Fed, I actually think it's a good thing, because the lower the market is, the more likely it's going to rebound. At least, it's going to have some sort of upside. I mean, it's a difficult thing to play, because I think based on the Russell, the way it's looking, the Russell is signaling that the market's gonna perform on the news. It's gonna like the news.
Gotcha, John. I've got up the New York Stock Exchange advanced decline difference, and I've got the advanced decline ratio.
Probably the difference is the one. Yeah.
Interval is not applicable. Only daily, weekly, and monthly intervals are supported.
Yeah, you have to get that on a line chart. But you can see that it's up today, and it looks like it's not that far off from all-time highs, that thing. So if the advanced decline goes to an all-time high on this Fed cut this week, I would consider that to be very bullish. So as long as the advanced decline is making new highs, that tells you the body of the market is still very strong. And usually, look.
Oh, how about this one? The advance minus decline.
Okay, try that.
Huh.
No.
Does it tell me a whole lot?
Yeah.
Now put it on an hourly versus the day. Now on an hourly, this is what we've got: advances minus decline. Can you interpret that for us, or is it the chart you're used to looking at?
It's a little bit hard, because unless you're looking at it on a line basis, you don't get the full picture. These sort of up and downs daily don't give you the scoop on this thing.
Okay, I can go. There's a line.
Okay, that's better. Can you go to a day? What is that? A daily or?
That's 1 hour.
Yeah, can you go to a daily?
Let's see. There we go.
Weekly.
Weekly, sure.
No, it's not giving. No, it's more of a. It's been in an strong uptrend. It's not giving you the full deal that for some reason. But I would say, because given we've been making all-time highs recently, you'd be pretty close to it's either continuing to make all-time highs, or it's close to it. And generally speaking, if that goes to a new all-time high in the next few days, it almost means you want to see a recession for at least a year and a half, which takes us through the election.
Now, there's just advancing issues, but I've never really used line charts, so a little bit out of my wheelhouse on those.
Yeah, the VIX is a good. It's this European. Actually, the euros are going lower again today. I mean, they're down a lot, 750 points equivalent for the DAX. It's definitely getting some people's attention here. If we break down lower tomorrow on this market, if we do, I've kind of got a bit of a sell signal developing on the indices right now. So. If we come in lower tomorrow, it might be a buying opportunity ahead of the Fed. Because I would think if they lower the rates, that there's probably going to be a rally to start with, and then there's either going to be a sell-off to start with, and then a rally, or the other way around. And it's hard to start to figure which way it's going to be. As far as the metals are concerned, the gold and silver are acting really well today. Gold's back up to 14.30.
Hey, God, I'm gonna bring up. I'm
silver's-
gonna bring up the gold chart, but take a look at this dollar chart here.
Yeah. You know, even though it kind
We're
of looks on the
approaching
bullish
two-year
side.
highs, I believe.
Yeah. But still, it's not hurting the gold, so that's kind of a positive. But if
There's
we
the high 2016 right there.
yeah, you know, if this Fed action causes the dollar to go down, I think that's going to be very positive for the markets and very positive for the metals. And there's
And in
some
theory,
articles
that's what
I
should
just-
happen, right?
Yeah. I mean, the system may be a lot more fragile than people think. This is a classic symptom of a topping formation in the market, where it's just like 2007. I mean, you remember, look, all the banks in 2007 making all-time highs. They were going through the roof, and kind of like the banks have been in recent days here, and then everything fell apart. And look, we're at a point here, and it's a good chart to put up on the gold, because look at the way we're breaking out to the upside from this base, which is kind of like an elongated head and shoulders thing. And what happens next? Well, we had a kind of a downdraft from 1800 to 1200, all the way down, and now we're on an updraft. And generally speaking, the market goes up with the same speed or a similar velocity to the way it came down, and that's something that you'd have to get used to, and look at the volume there. Look at that up volume down at the bottom, making new highs. I mean, that's pretty bullish. And I read some comments yesterday that some of the commercials have gone back short silver and gold, and doesn't seem to be working for them, because the gold and silver are higher today. The only thing that's negative is the copper has come down again, and the palladium and platinum are coming off. But the metals are very, very strong, and I think you can see it on that chart. Look, we're at a pivotal point here.
Oh, yeah.
See that gap, that 1500 gap. Imagine if we gap through 1500, right? We gap through 1500, which I think we probably will do. You will be looking at something you've probably never seen before in your life, which is a 6-year island bottom. Imagine that, a 6-year island bottom. So if we gap through 1500, you could see an acceleration to the upside of monumental proportions. Like a $200 move very, very easily, and maybe even a $300 move right up to the 18 level.
Are you talking about this gap right here, John?
I am, yeah.
Okay.
Yeah, that's the one. Yeah. Imagine that, a 6-year, that's something you've never seen in your life, a six-year gap. And that would be as powerful as going from 2011 to 2012 in the stock market, where you had a gap from one year to the next, and didn't just happen in 2011, happened in 2012 too. and look, we've had this kind of consolidation here around that. The next leg up should take us right up to that 1500 level. We could be there by the end of the week, frankly. Remember the last time I said that?
I do, yeah. Good tell.
So thanks. So it looks like it's gearing up for a very big move.
What's silver doing?
Yeah. Silver's looking pretty good too. See how, look, when you get a kind of an upward rally like this, and you're building value at higher levels like that and consolidating, it really does imply that there's going to be an acceleration or an extension to the upside of, I'd say right up to 18.5. Looks like that's a pretty good target for the silver. Yeah, you got some pretty big trend breaks as well developing there. And you know, when you eyeball that, I mean, that big W kind of formation there, you just on an eyeball basis, you can say we went from 14 to 60. So should get about a $2.50 move from here. So that really takes up to about 19 from where we are. And frankly, if we get to 19, you know, how long is it going to be before we're through the 20s, you know?
Right. And that's what I'm looking for.
Yeah. That's a dynamic structure there. When that thing breaks out, it's going to run big. Only about a week away from shipping product now. Once that happens, they're going from a standing start to revenues, you know, building revenues every day.
Apple's going to report after the bell.
Yeah, that could be a market turner. You know, I mean, right. By the way, as we speak, the European markets are breaking down even more sharply now. We're down almost the equivalent of probably down about 800 points now on the DAX. Equivalent of 800 points on the Dow, basis the DAX.
Yeah, I've got the DAX down 270.
That's down 326. According to my chart.
Okay, yeah, you're looking at futures, right?
I am, yeah.
Yeah, the index. I'm looking at the index number. So they finished the day session. The index was down 270.
Yeah, and the French, the euros, the euro stock. I mean, jeepers, we're down. This is a 3-4. We're down from 3,500.
Yeah, here you go, John. Here's the DAX.
Yeah. That's pretty devastating. That you know, unless either we're going to turn back up sharply, and we could, because it is a kind of a three-waver. You know, if this is a C wave, and maybe tomorrow this thing reverses, I mean, it could be dynamically bullish. You know, it could keep that in mind. It's not the end of the world just yet, but it is troubling to see this index getting hit. And you have to wonder whether it's going to drag. It doesn't seem to be affecting the U.S. side of things, to you know, because we've gone positive on. We're still negative on the semiconductors and the tech, but we're positive on the Dow and the mid cap and the Russell, and this. There could be something going on with Deutsche Bank. And by the way, even as we speak, the gold is popping higher as we just went up another $1 on gold.
Have you rolled forward to the December contract?
I have, yeah.
Yeah, we just rolled this morning.
Yeah, that's usually a good sign when that happens too. You know, when the December becomes especially when we're in a bull market. And when you see those spikes there, they may not mean like a lot at the moment, but you know, we could see a pretty fast move up to maybe 1450, and all of a sudden you're taking out that previous high there, and that would be. I mean, it's just dynamically bullish the way this whole gold story is unfolding, because you can almost, I would say, this thing could probably, you know, arc up a little bit. It might just in the next. Overnight now, it could be up around 1450, 1455, and then, you know, could really go substantially higher tomorrow. There might be some spikes, some spikes retesting. What's he saying?
He says, brace yourselves. The Fed might end up disappointing the market.
This guy.
I have no idea who he is. I just saw it stream across my eye.
This guy's not. He's sometimes a good opposite trader. You know, whatever he says, do the opposite.
Yeah, I'm not familiar with him at all. What else do you want to look at?
The oil is probably a candidate for some upside here if the dollar gets weaker. You can see it's potentially ready to break out, and that's kind of pretty positive, given we're in the middle of or in the end of July, which is normally a bit of a weaker time for the oil. You know, there could be some more trouble, you know, with Iran as well.
Yeah, that kind of fell out of the headlines because of the rat-infested city of Baltimore.
Yeah.
You know,
According
what is it?
to HUD, they put in about $18 billion into that area. I mean, you can't imagine that things are that bad. With that kind of money.
I parsed everything he said word by word, and I just how is what he said about that being a, you know, the problems that city has are evident, well documented by everybody. How because but when all these different people have spoke out about Baltimore and the horrendous condition that it's in, the second Trump says it, it becomes racist.
Yeah,
no,
crazy.
It's rats. It's human feces. It has nothing to do with a person of a color skin. It's rats. It's human feces. It's urban decay.
Yeah, Bernie said the same thing back in 2015.
But that wasn't racist when he said it.
Yeah, no, it's sickening. Listen, I tell you, this whole Mueller thing is going to blow up a big time because, you know, I think the average person probably figured out, if you connect the dots, it's looking more and more like a scam. The whole thing was contrived, and the fact that they use this guy as a kind of a, you know, front for it, if you like, to give it legitimacy. I mean, the whole thing is just trumped up. It's just, and I think that Trump's appointing of Ratcliffe to the DNI could actually, you know, upturn a lot of, it may expose all this Russia theory or Russia conspiracy as well. It's going to come sooner or later. Somebody, you know, the truth is going to come out. And it's, I think when that happens, it's probably going to, you know, Trump's pretty, he's got a very high IQ. And when he says, you know, when he first said that Obama was spying on Trump Tower, it was a big, it would have been better if somebody else had said it, but he said it. He came out and said it. And it's turned out to be true. And it's the same with the Russians. I mean, you know, they were trying to say that 17 agencies were saying that the Russian, I mean, look, they really indicted a whole bunch of people out of the phone book or out of the military. You know, maybe they just picked these military guys out of the blue. It's all a scam, the whole thing. And it's going to expose the deep state in a big way.
You follow Electronic Arts at all?
Okay, sometimes, yeah.
They just had, let me find this here. Fortnite, which is, I don't know if you are up on video games, but that's one of the big ones.
Oh, yeah, I saw that, yeah.
$30 million World Cup. The Fortnite World Cup was a kid's paradise. Okay. The people who filled Queens Ash Tennis Stadium I want to see the money. Show me the money. A lot of money going on behind all this.
The winner won $3 million.
Did he?
Yeah.
How old was he? Every competitor was guaranteed to take home at least 50 grand. Check that out.
Yeah.
Many of the World Cup qualifiers made their fame on Twitch. We've talked about that here on the show. That's a website that's dedicated to watching other people play video games. I assume so that you can learn things and you can up your game. But right now,
because
25,000.
that's what we found is so important is just being on.
Okay, 25,550 people right now are watching this guy, Tim, play Fortnite.
That's crazy.
3,000 people are watching Cypher PK play Fortnite. 14,000 people are watching Dr. Disrespect. He's live. I'm assuming it's E. Hey, John, they didn't have this stuff when you and I were growing up, did they?
No, they didn't. Yeah.
Oh my goodness, we were still playing pinball.
What comes next? There'll be new things soon.
So this is the guy right now. So 25,547 people plus our radio audience are watching this guy play Fortnite. I guess this is the first time I've ever even seen a Fortnite screen. You know, but it's a video game. Sometimes my son will launch into this really long explanation about some game or some scene or the weapon, and I just go, "Hey, son, you do realize it's a game, right?" "Oh yeah, I do. I'm just checking in because I don't want you to trip over the line, because I think some of these people, this has become their reality." What I do find interesting, I've never played them. There's a video game called Dead Red or Red Dead or something. It's where that song came from, Old Town Road. Now that looks very lifelike, very realistic, almost like you were there. I mean, there's nothing lifelike or realistic about this. It's just some little figure on the screen jumping around and beating stuff with those sticks. You know, I don't mean to talk down to anybody that enjoys a good Fortnite. What is it? They got that Red Dead Redemption 2. There it is. Is anybody playing that? Live channels. Okay. Let me get rid of Tim the Tat Man. Okay, so now only 24 people are watching this, but if I were going to play a video game, I would be more apt to play something like this than what we just saw. I mean, there's a little bit of realism to this. Not, not going to fool anybody, but I mean, isn't that clever?
Yeah, very clever. Yeah, that's cool.
So, Twitch TV. Big money. And it's just getting started. And pretty soon, every state in the U.S. is going to have legalized gambling. So, sports and esports are both about to blow up. And I originally brought that up to take a look at EA, which I think they are the owners or the creators of Fortnite, or have the rights to it. And there's, with all the hullabaloo and
Nothing
this
going
World
on.
Cup, their stock's down.
Yeah.
Although it may be finding a bottom right here. We're finding some support. Anything else you want to cover, John?
No, listen, thanks very much for the invite. We'll catch you tomorrow.
All right, my friend.
Should be a good day. All right, thanks a lot.
Talk to you.
Bye-bye.
Okay, on crude, I think that's where we left off. We covered the S&P and the Dow. Dow at the trigger again. This will be the third time. Russell, let me get back that on the right time frame. And it looks like I'm not updating. Okay, and I'm going to fix this. Always something, right? NQ. Crude. Triggering again here. Gold, we rolled to the December contract today. And soybeans. Last night, Concierge Trade Alerts said to consider being short at $9. We dropped to, basically, it dropped a dime at $50 a point, $500 per contract traded, but you'll notice there's no exit signal as of yet. Okay. All right. So their trial is ongoing. You're invited to come and be a part of it if you're not already. Just go to eminitrainingschool.com to sign up. If you have questions, email us, support@cfrn.net. Call us if you want to talk, 949-42-EMINI. And if you want to book a one-on-one mentoring session at no charge during the trial, by all means, do that. Go to cfrn.net/emini-personal-mentoring. I know you didn't get that, so just email Valerie, support@cfrn.net, or once again, give us a call. 949-42-EMINI. 949-423-6464. Yesterday we talked about Mozart. Today we're going to talk about feeling threatened. Have you ever felt threatened? Acts 4:31 says, when they had prayed, the place where they had gathered was shaken, and they were all filled with the Holy Spirit and began to speak the word of God with boldness. Got to remember, as a believer, you're never alone. Are you currently in any kind of an intimidating situation? If so, notice 4 things the disciples did when they felt threatened by the religious authorities of the day. First, they brought God into the picture. Acts 4:29. Lord, take note of their threats. So whatever it is that you're feeling threatened by, have you talked to God about it? If it's not big enough to be a prayer, it's too small to be a burden. God should be the first person you discuss it with, not the last. Prayer is the door through which He enters your situation, so be sure that you invite Him in. Number 2, they prayed for greater faith. They asked to speak your word with all confidence. Acts 4:29. It's unrealistic to think all your questions will be answered and all your fears will disappear. Faith and fear will always be at work in your life. To be an overcomer, you must learn to starve your fear and feed your faith on God's word. Because whatever you feed, that's going to win. Romans 10:17 says, so faith comes from hearing, and hearing through the word of Christ. Now, number 3, the disciples expected God to intervene. Acts 4:30. Stretch out your hand to heal and perform signs and wonders through the name of Jesus. Don't just sit in the seat of do nothing and expect God to do the work. Go on the offensive. When the disciples were in a storm, the Bible says, about 4 o'clock in the morning, Jesus came to them walking on the water. Jesus works the night shift. He's available whenever you call. Number 4, they were filled with the Holy Spirit. Acts 4:31. When they had prayed, they were all filled with the Holy Spirit. There's the key. They were strengthened and energized by God's power. You can be too. So whatever you're up against, whatever's intimidating you, whatever's threatening you, there's no power greater than God. And when you go, know that He goes with you. That's a good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.